And it's time to get a check on your money on Business Morning, the second trading day of this week. Good morning, good evening, wherever in the world you might be watching from. Let's get to the top stories that set your agenda now, starting with the global oil market. We see global oil prices rose today amid heightened tensions in the Middle East. You see Brent futures up by 0.5%, a big jump up to the muted starts that we got yesterday for the week. $90.56 a barrel for Brent. WTI crude, that's trading at $85.84 a barrel, also up 0.5%. We'll drill down on what's driving sentiment right there in the global oil market later on in the show. And back here, we see civil society groups led by Amnesty International are calling on the Nigerian government to block Shell PLC's proposed sale of its onshore oil business in Nigeria. The report published 40 groups, including Amnesty International, outlined several conditions that must be met before the sale can be approved. These conditions include an assessment of environmental pollution around the assets, a guarantee of funds for cleanup efforts, and consultation with local communities. The $1.3 billion deal, which was agreed upon in January this year with Nigeria-owned Renaissance Africa Energy, aims to fulfill Shell's long-term goal of exiting operations in the challenging Niger Delta. Let's get a quick check on the crypto market now. See, Bitcoin fell today as risk appetite remained frail in the face of higher for longer U.S. interest rates and continued geopolitical tensions in the Middle East. You see, Bitcoin dropped about 4.81% this morning at $63,245, and definitely over the weekend, when we got that report about the Israel attack, we did see Bitcoin fall below that 60K level. It did bounce back, but now we're seeing weakness again. Ethereum, 3,000, holding that $3,000 level by hair's breadth, down by 4.69%. Cardano not left out, XRP also down 3.51%. So we're seeing a lot of pressure in the crypto market this morning. We'll drill down on what's driving sentiment also later. And back here in Nigeria, Nigeria's headline inflation maintained its upward trajectory, but this time soaring by 1.5% to 33.20%, up from 31.7% recorded in February this year. So it's another high, but a 28-year high for the headline inflation, 33.20%, versus 31.7% for February 2024. That's a month-on-month basis. And we see food inflation, that's a big one right there, 40%. More pressure on the pockets of Nigerian consumers at this time, even when we know the average Nigerian spends over 70-90% of their income on food. So that's what they're having to deal with at this time. Core inflation, 25.90%. Urban inflation, 35.18%. We see rural inflation, that's much lower than urban, 31.45%. We'll also talk about what's driving sentiment there. All right, let's get to the annual meetings now. Over 15,000 persons are expected at this year's annual meeting of the World Bank and International Monetary Fund taking place in Washington, D.C., United States. And we have our correspondents right there, and they're giving us blow-by-blow reports as they come right there. But let's get this overview now from our correspondent, Sarah Chimagu.
From discussing the global economic forecast to delving into Africa's sovereign debts and exploring its options and opportunities on Tuesday, followed by the release of the Global Financial Stability Report on Wednesday, and culminating in a forum chaired by the Central Bank Governor Olayemi Cardoso titled Reforming Monetary Policy in Nigeria. The week promises captivating conversations on leveraging key reforms for improved livelihoods across global economies. During this event, the Apex Bank Governor will address a global audience, shedding light on how the new administration led by President Tinubu has embarked on an ambitious reform trajectory to reinstate macroeconomic stability and forge a pro-growth reform agenda. Initiatives such as fuel subsidy reforms and the consolidation of official foreign exchange windows have been pivotal within the initial months of this administration. While these policies have faced criticism in some circles, the central bank governor aims to spotlight the positive impact on the populace and strategies to tackle inherent challenges. This week-long event is poised to tackle concerns about adopting measures to eradicate extreme poverty by reducing the global population living in such conditions to 3% by 2030 and fostering shared prosperity. From the headquarters of the International Monetary Fund in Washington, D.C., Sarah Chimogu, Channels Television News.
All right, let's get to the first conversation now. It's another all-time high for inflation in Nigeria, even though the Naira continues the uptrend at this time. Let's drill down on the numbers now with Kalu Aja, author. Let's talk about your money. Great to have you on the show. Good morning.
Hi, Ladi. How you doing?
I'm great, but definitely my pocket's not looking too good with the inflation numbers we're seeing at this time. What do you make of these inflation numbers?
Well, it's very, should we say, shocking. 40% food inflation. That's what caught my eye. That just tells you that the trend from last year, 15% growth from 2023 till today. We haven't seen a break in food inflation. It's been going up and up and up for 12 months. I think it's about 15 months on breaking increase in inflation. What that means is that inflation expectation is now baked into the psyche of Nigerians. We expect prices to go up. And because we expect prices to go up, we also increase our prices with replacement pricing. That then creates a vicious cycle for inflation in Nigeria, up and up and up, and nowhere inside is going to come down. So massive number right there. Headline is 33 or so, like you said, but that food inflation is a big problem. 40% is unheard of for food inflation.
And I guess one good thing, the Naira is strengthening, at this time. But how come it's not playing into, a softer number when it comes to inflation?
Yeah, because the inflation in Nigeria is not monetary. It's basically supply-driven. There's a fall in supply of food because of the issues we have around food production in Nigeria. So even if the Naira is 1-to-1, or even if we control inflation 100%, the supply of food is what's causing food prices to go up. And we can't fix that with monetary means or with exchange rate stability. We've got to increase the supply of food in Nigeria. That brings down inflation and this food inflation that we're seeing.
And definitely, we keep talking about the fiscal, side of things. We've seen the monetary policy, committee, raise rates by about 600 basis points in the first quarter. We've seen all the action there, also in the FX market. But what should we be seeing, from the fiscal side to actually help with this inflation?
So now it's now a national security issue, which means that we've got to get the security guys to go in there and allow the farmers to do their jobs. Farmers can't farm, so harvest yields are down. That's the very, very first thing there. You first of all have to take away the insecurity before you talk about fertilizers and yields of the crops. It's bandits, it's terrorism, it's internal strife. Fix that. Then medium to long term, we fix the yield, the fertilizers. Right now, no one can farm. So if they can't farm, you can't get produce out. If you can't get produce out, food stays very, very high. Look at the inflation numbers. It's driven by food, 17%. The next guy is about 5%, right? So it's driven by high food prices. Perhaps we start to have a serious discussion about importing food. If we can't make food in Nigeria, let's import food, 90-day window, tamper the prices down. You can't build any economy on 40% food inflation. It's just not going to happen. If rates are 1-to-1 and there's no Gary to buy, Gary is number one item listed that's gone up in price. If you can't buy Gary, but dollar is $1 to 1 naira, then what's the point of $1 to 1 naira?
Right, definitely. That's making it quite difficult at this time. But how hard does this new data make the job of the CBN Monetary Policy Committee? How hard does it make it, at this time? We've already done 600 basis points in the first quarter of 2024 alone.
I think what it shows is that we can't use monetary policy alone, right? That's what it shows. Because what will the CBN do? Will they keep on raising rates? Will they now say we're going to raise rates because inflation is going to keep on going higher? There's a point where they stop and say we're killing the economy too much. We can't raise rates to say 35% or 40%. That will be a death knell to the national economy. So he's going to do his part and say, I have done all I can do. Fiscal side, Nigerian army, Nigerian executives come in and help us. It's going to be a two-pack punch right there. He's done his monetary side. executives are going to come in. We can't raise rates. Raising rates cannot produce food. And the problem in Nigeria food inflation is food supply. It's not a monetary expansion. It's food insufficiency caused by the lack of food output because you have bandits and terrorism in the food growing areas of Nigeria.
All right, let's drill down on some of the numbers a little deeper at this time. We see the inflation rate change at this time. We see headline inflation, that's about 3.02%. That's the amount of change we're seeing versus 3.12% in February. So the rate of change is lower, for March. Same for food inflation, 3.62%. versus 3.79% rise in February. Then for core inflation, that rose, in March, 2.54% versus 2.17%. So we're seeing, little drawdowns, with the rates of change. Is that from the MPC's action, actions we've seen from the CBN and the MPC in the first quarter? Is that why we're seeing that little drop there?
I doubt it. So it's increasing, but at a slower rate. But if you look at 15 months, like I said, if you look at 2023 till today, there's been no break in the rise in food prices. So it's going up, but it's going up slower, but it's going up. The problem, Ladi, is the expectation of inflation. If I believe that prices are going to go up tomorrow, then what do? I increase my prices today, i.e. replacement pricing. And when I increase my prices, you increase your prices, then inflation then gets baked into this vicious circle. That's the problem. So those rates you're talking about, those the people don't see it. What they know is that Gary price has gone up and their wages have stayed flat. This is the problem. Your wages are flat, but your costs are inflating. So it's a direct punch to you. You've got to decide if you're going to eat or buy gas. And once you have that discussion going on, you don't notice those 1% slowdown in change. What you see is that cost of food, which is 17% and 57% of your budget, has gone up, and your wages haven't gone up as well.
Right. And we also have the termination of energy subsidies for Band A customers. That's still there at this time. How will this impact, the inflation story going forward?
Yeah, so that's a two-pack punch, right? So the A guys pay more, but we hear Dangote is going to bring down diesel costs if he starts to send out his diesel. I think I saw the news article last week of diesel trucks going out. So we might see a drop in diesel cost, but then your energy costs go up. The net effect, we will have to watch and see what happens, right? But overall, what we're talking about is that there's been an increase in cost to the average Nigerian without a corresponding increase in revenues. So consumption is flat and productivity hasn't gone up, maybe via infrastructure development. That's the narrative, Ladi. Consumption is flat, costs are going up, and wages are where they are. That's a big, big, big problem for the largest economy in Africa.
And talking about wages, we're expecting a new number, for the minimum wage. The president's going to announce that, come May. But we also have, the TUC, the NLC, they've provided a number over 500,000 Naira. That's about 600,000. How do you see that number? And what do you think is the realistic number that will not also, honestly, stoke inflation?
I'm a capitalist, so I don't like labor unions, but we have to increase wages. I don't even think 500,000 is enough for Nigerian workers. I don't think the problem is the cost. I think how we're going to pay for it, right? If you make it #1 million a month, that's an obscene number. But the problem is that the cost of production in Nigeria has to come down. A way to increase salaries is to reduce costs. If you bring down the cost of generating power, bring down the cost of sending your kids to school, that's also a salary increase. So across the board, the federal government is increasing prices. Look at Nigerian customs. They're using 1.4, 1.3, 1.2 as the exchange rate. Why can't they use 500 Naira or 300 Naira as the exchange rate? That becomes a salary cut, a salary hike, a cost cut to every Nigerian. That's one way you can increase salaries of workers. It doesn't have to be an increase in salaries, but the reduction in cost does the same thing, because we can't afford to pay #1 million. Even though I want to earn #1 million, we can't afford to pay it, but we have to jumpstart consumption in Nigeria. Without consumption, the economy is going nowhere. You can't consume with 30,000 Naira a month as minimum wage. That's a non-starter.
All right, always great having your perspective. Thank you so much. We're still drilling down on this day to go forward. That was Kalu Aja, author. Let's talk about your money. Thank you so much for coming on.
Thanks, Ladi. I appreciate it.
All right, we'll take a break now. When we come back, head to the oil market and also talk about what's happening with food commodity prices. That's in a moment. Do stay with us. And still on the March inflation data, we did hear in food inflation, 40%. That's more pressure, on the average consumer. Let's drill down on commodity prices now. We have Dumebi Oluwole. She's a senior associate at Financial Derivatives Company joining us right here in the studio. Great to have you, Dumebi.
Thank you for having me. Good morning.
And yes, I know you go to the markets and definitely.
How do you know?
I'm sure you go to, well, maybe you don't. Maybe you send somebody to the market at this time. But we're still 40%.
Yeah.
Food inflation. That's a big problem right now.
It is. I mean, it's obvious that we're still having a lot of issues on the food production end, and also the spillover effects of the Naira depreciating so much early on in March. So that's still having a spillover effect on food prices. But more importantly, I actually want to draw your attention to the month-on-month numbers. So month-on-month, the headline inflation actually slowed. Not so drastically, but it did decline. And what that is beginning to show is that to some extent, domestic commodity prices are beginning to abate, not very quickly, but it's beginning to happen. And even food prices on a month-on-month basis, it also declined just marginally by about 0.1%. And what that is speaking to is that we're seeing a decline in commodity prices, not very widespread, but if you notice, if you go to the market now, a derica of rice that probably was going for around 1,500 is probably going now for 1,400. In areas where it was going for as high as 1,300 or 1,200, it's now probably 1,100. And interestingly, we're seeing a mixed movement across food prices, where we're seeing food prices that are domestically produced actually being more expensive than commodities that were imported. So what this means is that the sharp decline in the Naira within March, from the middle of March towards the end of March, is beginning to somewhat have some impact on commodity prices in the market. And remember that we said that as of the beginning of the year, we've seen the exchange rate pass-through effect somewhat dominate, or significantly push commodity prices or drive the headline inflation. As of February, the exchange rate pass-through effect did explain about 50% of inflationary pressures in Nigeria today. So with the Naira declining, we should begin to see commodity prices actually decline a lot more. But the thing is, with the uniqueness of Nigeria's market, and not only Nigeria's market, in developing markets generally, there is a longer time frame for the transmission mechanism for when policy changes happen and when they actually begin to translate to the outcomes that we want in the domestic market. And that period sometimes takes about 6 to 12 months. In some cases, it's even as long as 12 to 24 months. So while we do expect that the Naira's appreciation and to some extent the gradual slowdown in money supply growth to begin to translate to lower commodity prices, it will take time because there are a lot of other structural factors that are pushing commodity prices.
And also, we know energy, has a way of playing into that inflation story. We're seeing the geopolitics in the Middle East at this time. And that's moving the oil market. And definitely, we want to see oil prices quite stable. But with what's going on now, everyone's, looking at what, Israel, might do next, in response, retaliation to the attack by Iran. And we've heard some numbers, for oil prices if there's an escalation. So how much of this will play into the inflation story in the global space and right here in Nigeria?
I mean, we've seen this happen like early in 2022. We have very good references for how geopolitical tensions spill over from the global economy into Nigeria. So the story would be no different. But the thing is, we have to look at the scenarios that are appealing play here. If there is an escalation, we already know what's going to happen. Global commodity prices will increase because, obviously the issue with the Suez Canal, the issue with global energy prices increasing, how that already would feed into the US's inflation outlook. Remember, US inflation actually increased in March, and there are expectations, at least the Bank of America is expecting that inflation could actually nudge further in the US to around 4.8%. And if that happens, what this means is it completely changes the global monetary policy environment. And it means that interest rates are going to remain higher for longer. And if that is the case, the US dollar will continue to strengthen. What that means is higher importation costs for Nigeria, especially when, even though the Naira is appreciating, if you're still going to have to spend a lot more in dollar terms, just because the dollar is strengthening, that definitely has some impact. The other thing to also consider is, the importation of refined petroleum products. So while Dangote Refinery is already, bringing out some diesel, we do expect that to take some time before it, completely reduces commodity diesel price or energy prices in Nigeria, to be fair. And aside from that, the key factor in terms of the supply side mechanism for commodity prices in Nigeria today, right now, is power. Right, so and with electricity prices significantly increasing, we know about
that's for the almighty band A.
Yes, and that almost to an extent, captures companies that are also producing. So, because they also, use a lot of power. Most of the companies are situated in areas where they're able to experience that kind of long power supply. And even still, they still, they still purchase diesel. They run on diesel, So essentially, we know how an escalation will affect the domestic commodities markets, and it's not going to be a sweet experience, because commodity prices that was expecting would continue declining will now start increasing, especially imported commodities. But the other thing to also consider is, what if it just doesn't escalate? Or what if it does have what if it has a muted impact on the global economy? All prices don't skyrocket; they remain where they are, and there are expectations that this is going to happen. I've seen an analysis where there's some analysis that are saying that we don't expect the war to escalate, even though social media is saying it's completely different. We've seen World War III trending. But I mean, aside all of that frenzy going on, there are expectations on the economic side of things where we don't expect it to escalate. And if it doesn't escalate, it benefits everybody: the US, the UK, EU, China, Israel, in fact, Iran. It does benefit everybody, but most importantly, developing and emerging markets that are still trying to come out of the funk of the global monetary policy environment, the COVID-19 pandemic. They were seeing a lot of debt restructuring programs happen. It will be more beneficial for them. So we keep our fingers crossed to expect that. Hopefully the latter happens. It doesn't escalate. Yeah.
And I guess the million-dollar question at this point is, how much can the average Nigerian consumer, take at this time, or are we just used to higher prices at this point?
No, I mean, the problem again with how things work in a developing economy like Nigeria is that the prices are really sticky. It does take time for, when you're seeing the Naira appreciate, but you go to the market, they're still telling you a bag of rice is as high as 80,000 Naira.
Because it's really quick, taking the prices up.
Taking prices down really, really slow. And one thing that we need to understand about economies like Nigeria is that there are a lot of other multiple factors feeding into commodity prices, especially food items. So, and again, remember I told you about the lag effect, right? So it will take time for all of these things that we're seeing to translate into lower commodity price for a longer period of time, that people can now say, oh, my pockets are really eased. I'm not spending as much as I used to spend before. And unfortunately, this is not something that would happen immediately. To be very honest, we're looking at a period of at least 12 months where we'll see commodity price significantly decline. Remember, the CBN's inflation target for 2024 is 21.4%. That is still high. That's still, because clearly what that means that we're looking at food inflation of above 20%. So meaning that compared to where you were in 2022 or even 2023, you will still be spending a lot more than what you were spending before, especially on food items. But of course, people would appreciate prices to decline. So the expectation really is that prices would fall, but it will decline at a very slow pace because of all the other factors.
Joke I saw one time, you're sitting at home, it's better to just stay home, because if you're just going out to get fresh air, 50K has left you about 100,000.
Exactly.
Just
and
like
it's really something, especially when you consider the consumption basket of Nigerians. If you remember the 2019 consumer expenditure report by the NBS, where it did break down how much people spend, and you realize that food outside of home actually takes a lot more from people's pockets than food from going to the market to buy food and then cook in the house. So imagine people that probably would enjoy fine dining or typically would like to order food and they imagine just one
restaurant inflation. That would be incredible.
It's extremely high. It's extremely high. So those are things that we do expect with food inflation. It will decline, but it will happen at a very slow pace.
All right. I guess we'll look forward to what the MPC committee, what they do next with this data. Thank you so much, Abdulmebi Oluwole, Senior Associate at Financial Derivatives Company.
Thank you for having me.
All right, so there you have it. Those are the numbers, and we'll take a very, very quick break. Then we'll come back. We'll just get a touch on some of the markets. That's a moment to stay with us. All right, let's get a quick check on the market now. The close for yesterday, 0.52% down. We see the equity cap sitting at 56.57 trillion. So we got that inflation data. It'll be interesting to see how investors react to that number in the market today. The markets are open right now. We'll get a check about 1 p.m. For Business Incorporated, and we'll see what's happening in the markets. I'll hand things over now to the Sunrise Daily team.